Hi there folks, welcome to another clip here on my YouTube channel. Before we get started with today's topic, that's the Euro-US dollar currency pair, I would simply like to remind you, of course, first of all, leave some thumbs up please. Second, just have a click at the red button here at the YouTube platform, it's absolutely free. Third, there's no commercials. Alright, let's have a look at the Euro-US dollar currency pair on a daily basis right now. As you can see, that is a stock 3 platform here, and I'm analyzing the Euro-US dollar rate from the long-term high here from January 6/21 from the 123.49 marker as a 100% going down to that multi-year low here at 28 of September 22 at 0.9535.7. So these two levels combined give you a couple of interesting levels. Once we saw the 109.43, sometimes I spoke about the 47, that's an error, so that's the 43 here, the 50% FIB from that kind of a move, and the next one to the upside is the 61.8%, which is 112.74.6 here. So these kind of levels marked as a green first big box here as a trade running into that target of the longer term picture, and then I've got some kind of a couple of highs here. You see these highs around the 140.90s and direction 115.10s and some around that 115 marker. Interesting to say that there is a target from a couple of banks in direction of the 115 until the rest of the year 2023. So just saying. To the downside could be something like a correction move. We saw that big moves from the last 2 days, especially when it comes to that non-farm payrolls day, so Friday. So the correction way down over 1% move to the downside, going sub that 108 marker and possibly heading to a 107 or simply to that 106.80s, which we see from that 0.9535.7 FIB arrangement up to that high of 110.34. So there's another FIB analysis right here, and that kind of retracement level, the first is the 23.6%, is at 106.80. So combination, you see that red box here, which is the targets onto the downside, first support zone, coming from a lot of highs right here and from the last high around here. So you see that is a high from mid of December going between the levels of 106.81 and 107. So that is quite the same levels we see from that 23.6 Fibonacci retracement analysis here. Well, we came down from a kind of a overbought territory just regarding that relative strength index right here. You see moves way above the 72 marker before that non-farm payrolls data came out, and we had a euro well overbought over the last weeks. So that is a possible reaction. We saw something like a catalytic event from the non-farm payrolls numbers to just take the winners and take the winners off the table for a couple of days, recalibration, and then back on. Right now it looks like we might be something like a retest of that sub-levels here and then going back up again. Nothing like Merlin's glass ball, as I always say, just a pure analysis and giving you some trade boxes to the upside and as well to the downside. All right, let's have a look at the chart technical part right now finished, and looking into that fundamentals in the next part. Okay folks, well, some fundamentals, just to put that in addition to the chart technical part. Let's have a look at the current numbers of the Bureau of Labor Statistics. So they published really strong numbers on Friday. 517k new jobs added, agriculture. And the unemployment rate is at 3.4%. So that's the best number since 53 years ago. So it's a really impressive number. And especially when it comes to all this kind of all these kind of circumstances we face from the current environment, Russia-Ukraine war, supply chains hiccups still around, and especially when it comes to the real impressive move from the Federal Reserve, because they simply started at 0% and they're now crawling in the direction of the 5% marker. So that's insane, and the market is still up, and the unemployment rate is so much down, and so many people got new jobs. besides all that kind of kickouts from the big techs, it's still nothing, just to compare it with that one. Hopefully it stays that way. Well, have a look at the current status of the euro-US dollar. Is that the real change? Is this something like we face in the next weeks to come, that the US dollar, so that the greenback is getting stronger again? Is there a reason? I would say no. I would say this is simply something like a reaction of the market. The euro was well overbought. If you just check it out over the last weeks and over the first quarter. And if you check out the current issues with the debt refinancing and a possible bridge financing and the dispute between the Republicans and the Democrats in Washington, I would simply say that there are some more hiccups for the US dollar, for the greenback ahead. So possibly we simply have some technical markers we could get closer to. Check out the chart again. I told you something about the marker of 109.47, and I told you something about the marker of 112.74. Once again, this is something like a 50% fib and a 61.8% fib, coming from that high from January 21, 123.49, getting down to that low 095.36 from 28th of September 22, and these two levels combined, these give you these markers I spoke about with the 109.47 and the 112.74. So this is something very interesting, and maybe just to deliver you that kind of information on top, there are some investment banks, for example, Morgan Stanley, they spoke about 115 for euro-US dollar this year, and if you just check out the chart, see a level of 115, go back in the chart technical history, you will find some highs getting close to that one, getting close to that marker, and it possibly is something like a retest of this level again. Well, one big point for the euro and one kind of a issue for the recalibration of that whole move is the rate differentials. So the so-called rate sizzles, they're simply getting more and more together. So this is the reason, because not only the Fed is hiking, no, the European Central Bank started hiking already, and they are getting that kind of a move done with 50 basis points. And right now, the last week, we had 50 basis points as well, and they spoke about the next 50 basis points in March. So we are getting closer to get that kind of rate differentials more closed and almost getting there at almost the same levels or close to that levels. So the big rate differentials, that this kind of a time is gone, and it could be something like a recalibration as well, because the Eurozone is not facing that kind of apocalyptic issue with energy crisis we had a couple of months ago, especially when it comes to that kind of data we saw from the Intercontinental Exchange, where we saw prices for the leading European natural gas contract, the Dutch TTF futures, around 350 and more euros per megawatts. So that is kind of crazy for a contract of natural gas here in Europe. And we came down there, and right now we are on the level, even at a level before the Russia-Ukraine war started. So if you just check out that kind of apocalyptic news from the past, from August, end of August into direction September, and you just check out the current issues with energy prices, you will see that it's something like a relief. And on top of that, a relief for the whole Eurozone economy. And the GDP numbers just right now printed that way. It is not a signal on recession right now. Hopefully that stays that way. And looking into the future, it is something like a possibility of a mild recession, or even something like getting around that recession marker once again. So this is a total new environment, and the whole market is something like recalibrating and repricing the euro-US dollar rate at that kind of a way. In the last weeks we saw that. All right. So that are a couple of fundamental facts. One thing on top. Thank you very much for your time, for your attention, and see you next time. Bye bye.